An increase in excise duty coupled with diminishing purchasing power by consumers and currency depreciation saw the East African Breweries Limited full-year net profit reduced 21% to 12 billion shillings. The board has recommended a final dividend payout of 1 shilling and 75 cents per share, which in addition to 3 shillings and 75 cents interim dividend, bringing the total dividend payout to 5 shillings and 50 cents per share.
So in the second half of the year, we continue to face these challenges characterized by inflation-driven cost escalation, mainly fueled by continued geopolitical tensions. These complexities are still impacting the wider manufacturing operations like ourselves at EABL and depressing consumer wallets, especially on discretionary spend.
Slow economic growth and pressure on real growth in consumer income has pushed the middle and lower income consumer globally, shifting consumption to more affordable products.
From a regulatory perspective, if I think about the last 14 months, it is the highest tax excise we've ever seen for ourselves and the business. So if you remember, in June last year, there was a 10% on beer base, there was a 20% base on excise in spirits, and then over and above that compounded by the inflationary increase, which was about 6%. So that compounding effect of excise was very tough, and there is no pricing. We tried to cover all the costs excise increase, but it was very, very tough.
East African Breweries Limited says premium spirits registered double-digit growth while increased excise duty on glass at 25% and 61% on neutral spirits affected the sale of beers. This pushed up sales marginally from 193.8 billion shillings to 197.6 billion shillings, with Uganda and Tanzania registering growth while sales in Kenya reduced.
So we saw our grain inputs, sorghum and barley, go up in price by 31%. Logistics costs driven by petrol and other factors grew by 14%.
Profits dipped 21%, mainly on account of increased costs, with electricity increasing by 40%, while transport rose 14% as excise duty went up 17%. The listed brewer plans to increase sourcing of key raw materials such as sorghum and barley locally to lower the cost of production.
To describe the costs side of the business as a very, very big storm that really hit us, and we were not able to cover a lot of these costs with our pricing, because obviously, remember also the next slide, remember the consumer was also going through the same stress.
Regina Manyara reporting for Lunchtime News.